Greetings, members, one and all of the Salivation Nation. Are we drowning in a glut of gold? Let's explore. It's not just New York gold traders, but also just in terms of the market in general. But it does kind of start here. About 17 million ounces of gold has arrived since the end of March. I just spoke about this in a prior video. But this comes to us from Bloomberg.com. Now, some of you post links to Bloomberg stories, and I watch them and I look at it. But the problem is I only get so many views before they make you pay for a subscription. And so apparently that had run out. I was able to get this one, so I thought I'd do a video on it before it disappeared. But very interesting indeed. This is about what's happening with the glut of gold. And actually, I just spoke earlier today and talked and discussed about anecdotally how the actual supply chains for gold is much different than silver right now. But yet the premiums are still pretty high for gold, but they are coming down somewhat. And even with silver, they're coming down a little bit, but a lot of that is based off of demand. There's still a lot of demand for gold, but we might have a little bit of a glut going on here. The New York gold market has been flipped on its head in just a couple of months, with the scramble for the metal turning into a glut. Earlier this year, traders who had sold contracts paid a steep premium to close positions after the coronavirus pandemic grounded flights, sparking worries about the ability to get gold to New York. That drove futures to the highest premium to the spot price in 4 decades, attracting a flood of metal to the U.S. from around the world. Now contract holders are trying to avoid taking delivery from the massive inventory. A June future sank to more than $20 an ounce below August earlier this week from a premium in mid-April. Notices to deliver on June contracts began to be filed on Thursday. The June contract is also below spot prices after fetching $12 premiums as recently as mid-May and $60 in March. The steep discount echoes some of what oil traders saw earlier this year, when crude stockpiles surged after fuel demand plunged. In that extreme case, which no one expects to be repeated in gold, prices plunged below zero, as traders who had bought futures but weren't able to take delivery were forced to pay buyers to unload the contracts. And here we can see the glut of gold here. The lockdown squeezed deliverable supply, and then they went up. It's a little bit of a game of chicken, said Tai Wong, head of metals derivatives trading at BMO Capital Markets. All of a sudden, you get into a similar problem that you had in crude, but slightly different. For crude, they literally didn't have a place to put it, whereas in this case, speculative longs don't want the logistical hassle of holding physical metal, which is why cost to roll has blown out. Since the end of March, just over 17 million ounces have flowed into the COMEX. That's more than the total increase in ETF holdings last year, and almost equivalent to India's annual jewelry demand. Inventories stand at a record 26.3 million ounces as of Wednesday, dwarfing the 6.1 million ounces worth of June contracts still open. To be sure, the imbalance in the New York market is a localized phenomenon. Gold remains in high demand around the world among investors concerned about the state of the global economy, and that's for sure. In fact, even today, Donald Trump has held a press conference and has been really rough on China and the World Health Organization. And those geopolitical tensions are what helped to make gold go up today, as well as other market news. But bullion bulls dump soon deliverable contract for later dated futures. Here we can see in this chart. The seeds of the current glut were sown when the coronavirus shut down commercial flights earlier this year and forced some gold refineries to close. The shutdown strangled the supply routes that allow physical bullion to move around the globe and prompted banks to step back for arbitraging between London and the New York markets. At the same time, demand for gold as a haven grew amid fears of the pandemic's economic toll. The premiums for New York futures over London surged as traders rushed to avoid delivering in April, instead buying back contracts they had sold short. Traders trying to capture that premium were able to arrange physical delivery, swelling inventories. Key refining hub Switzerland shipped a record amount of gold in the U.S. in April, according to figures dating back to 2012. And I'll stop there because for a while they were shut down too. That's probably what caused a panic of buying for fear that they wouldn't be able to get anymore. So this is the ship to the record amount of gold to the U.S. in April, according to figures dating back to 2012. Australia's Perth Mint also ramped up production last month and shipped bars to the COMEX. It's a seller's market because of the premium, and the buyers are stuck right now. Peter Thomas, a senior vice president of Chicago-based broker Zana Group, said in a telephone interview, "Do you want to deliver now or do you want to deliver into the back where the premium is high?" And so that is very interesting to see where it's going, and it's tough. And this is another article here. It talks about how gold sparks round-the-clock rush to fill U.S. gold vaults, and talks about the scramble to jump in on one of the hottest gold trades in years by shipping bullion to New York has sparked what may be one of the largest ever physical transfers of the metal. The flows into New York are unprecedented, said Alan Finn, Global Commodities Director at logistics and security provider Malka Arment. His company's teams in New York have been working 24 hours a day to cope with demand while navigating lockdowns, flight disruptions, and social distancing. Gold flooded into the U.S. in recent months as traders rushed to profit from an arbitrage caused by dislocations in the markets triggered by the pandemic. Since late March, some 550 tons of gold worth $30 billion at today's price and roughly equal to global mine output in the period have been added to the COMEX warehouse stockpiles. Hundreds of tons is what have been imported. And here you can see the record flows. It's crazy the amount of demand there's been. While tens of billions of dollars of gold change hands every day in financial markets, a much smaller amount tends to physically move between vaults in trading hubs like London, Zurich, and New York. But that started to change as the COVID-19 crisis affected the supply chain. When planes were grounded and Swiss refineries closed in late March, traders were worried they wouldn't be able to get gold in New York in time to deliver against futures contracts. That caused futures, which typically trade in lockstep with the London spot price, to soar to premium as much as $70 an ounce. That created an opportunity for enterprising traders to buy gold somewhere in the world at the spot price, sell futures, and benefit from the difference between shipping the metal to New York. So the scale of the trade has been revealed in exchange reports, imports, and export data, and comments from some of the leading precious metal shipping and vaulting companies. On Thursday, traders declared their intent to deliver 2.8 million ounces of gold against the June COMEX contract, the largest daily delivery notice in Bourse data going back to 1994. Swiss gold exports to the U.S. have surged, reaching 111.7 tons in April, the highest on record. American import data for April isn't yet available, but already in March, gold imports topped $3 billion, according to Census Bureau, the highest in at least a decade. Refineries as far away as Australia have ramped up output of kilobars, the form typically delivered on the COMEX to ship to New York. Here we can see the gold flood, and You can see from Switzerland the amount of record amounts coming in here in 2020. For Brinks Limited Managing Director Mark Woolley, the spike in demand to ship gold to New York has been unlike anything he's seen in 20 years in the market. The amount of metal that we have successfully moved into New York is pretty significant, he said Thursday in a webinar hosted by the London Bullion Market Association. It's probably not far off the total amount of metal that's been mined in this period. CME Group, which owns COMEX, responded to the recent market dislocation, introducing a new contract allowing for delivery of 400-ounce bars to type traded in London. Still, other changes need to be at least considered, according to the LBMA chairman, Paul Fisher. The enormous movement of gold has been a boon for logistics companies, but also a challenge. Not only have passenger flights, which shipments are typically transported, been grounded, but New York City, where many COMEX warehouses are located, has been a hotspot for the virus. To deal with flows, Loomis International UK opened up an additional vault capacity. Malka Amit considered using airports in Boston and Philadelphia, which hasn't needed to yet, Finn said. While large volumes and virus-related restrictions in vaults and airports caused some delivery delays, much of the spike in the premium for futures contracts in March, which has left some banks nursing sizable losses, was driven by the perception rather than reality, Finn said. My own personal opinion is that any assessment on the inability to get gold was ill-informed at the time and was made on assumptions rather than fact. Still, the bonanza for precious metal shippers may last a while. Large deliveries have seen June COMEX futures drop to a discount to spot prices this week, but later dated futures are still at a premium. And as investor interest in other precious metals picked up, futures for silver and platinum have also traded at premiums to spot. These guys at New York have done a great job, said Brian Hayward, head of the Loomis International UK. We're seeing a lot of silver head that way right now. So very interesting indeed. This just goes to show you that demand is still up, and it's in spite of this glut, and the prices have not subsided. The prices are still up. Spot prices are up. And more than likely this will be disseminated and worked its way out. But it's amazing to see this record, really a panic amount of getting metal to satisfy the COMEX. But there it is, this glut. Fascinating indeed. So post your thoughts below about this interesting situation with gold in New York, this glut. I would like to extend a multitude of gratitude to you all for taking the time to watch. Remember, I do post videos on a daily basis. So if you don't get any notifications, I do encourage you to hit the notification bell, but many times that doesn't work. If it doesn't show on your subscription feed, well, you can always go to the channel page, bookmark that, and you will see a video on a daily basis there. So I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.